Hey guys, this is Mr. Oxy. It is Wednesday. It is October the 20th. They sometimes say no news is good news, but there is a lot of stuff going on. And, I thought, why don't I just wrap some of these thoughts up in a quick video and let's take a look at some of the things that have been going on. Let me just open my browser here and so we can walk through some of these things. This is Morningstar, October 18th, of course, which was this past Monday. Occidental Petroleum stock rallies after truest analyst upgrades and boost the price target to a street high. Shares of Occidental Petroleum rallied 2.3% in pre-market trading on Monday, putting them on track to snap a 5-day losing streak. They ended up snapping that 5-day losing streak. And if you're an Oxy long, for the past couple of days, we've been snapping that losing streak still. We haven't hit the high again of $34 and a few pennies or whatever, but we're kind of edging up closer at $33 and a few pennies or thereabouts. After truest analyst Neil Dingman became Wall Street's most bullish on the oil and natural gas exploration and production company, citing expectations that record free cash flow will continue. I certainly expect it to continue for the third quarter once they announce, which is going to be on November the 8th. Yeah, I do expect record free cash flow reporting when we get to Q3. Dingman raised his rating to buy from hold and raised his target price to $50. Right now, he is the analyst with the highest price target at $50. I think that is a fair price target. And I think there is a possibility we should see $50 within the next 6 months or so. Depending on, obviously, on what happens at the end of the quarter. And once again, at the end of Q4, once they report that, which will probably be early February of next year. This $50 price target implies a 58% gain on Friday's closing price of $31.66. Now, obviously, we've moved a little bit on from there now because we had $33 and something. That is now the highest price target amongst 29 analysts surveyed by FactSet. We believe that the company will soon discuss plans to return its quarterly dividend to the 2019-2020 levels, along with the further possibility of additional variable dividends and/or stock repurchase programs, Dingman wrote in his note to clients. Interestingly enough, further, he added, Oxy's decarbonizing operations continue to gain steam, capitalizing on its notable infrastructure in place, underdeveloped and/or under development. Oxy's stock had lost 6% over the past 5 days. It was last week, since it closed at a 20-month high on October 8th. And this is an important point just for the, if you watch Oxy every single day, like I do, like I'm sure you do too, then you think like, why is crude going up and Oxy's going down? And sometimes, you kind of get the feeling that the one is tied or married to the other. And then they kind of separate and you don't know where it's going, and it's certainly not predictable. But here's the actual stat. Since it closed at a 20-month high on October 8th, this is Oxy, it has soared 82.9%, so 83% year to date through Friday, while crude oil futures have run up 72%. So even though it does not necessarily feel like it, Oxy is actually trending slightly ahead of WTI in terms of its gains over the past, in this case, 20 months. So it's interesting to kind of see where it is. They also say natural gas futures have rocketed 110%. All these things, as we've discussed many times before, are very, very inflationary. And being an energy investor, you guys have so much energy, at least provides you with a bit of a hedge against increase in rising prices. Yahoo Finance's Nilanjan reported that Chevron's net zero goal and Occidental's Ghana sale dominate the oil and gas stock roundup. This kind of news headlines, so I'm just going to go and look at this very, very quickly. West Texas Intermediate crude was futures gained 3.7% to close at $82.28 per barrel. By the way, this was today, while natural gas prices fell, surprise, surprise, 2.8% to end at 5.41 per million British thermal units. In particular, the oil market managed to maintain the forward momentum from the 7 previous weeks. But there's a little paragraph that I want to show you over here. Crude supplies recently fell to their lowest level since October 2018, with U.S. commercial stockpiles down some 15%, since mid-March. So forget about the crude inventory levels that the media loves to share with us on a go-forward basis and on a regular basis, week to week or whatever the case might be. The fact of the matter is, crude supplies fell to their lowest levels since October 2018, with the US commercial stockpiles down 15% since mid-March. There has also been a marked improvement in fuel demand on the back of rebounding road and airline travel. Besides, the commodity was boosted by the major international forecasters' encouraging view for oil demand growth. We know this, guys. This is not news. You just need to, focus and not be distracted by the media reports. I can tell you, as a frequent traveler, and for those of you who follow my channel, many of you will know that I travel quite a bit and burn a lot of fossil fuels in the process, because I either drive or otherwise I fly. Recently, I flew a round trip from Fort Lauderdale Airport, which is in southern Florida, to Charlotte Airport, which is in North Carolina. The place was packed. When I got to the airport in Fort Lauderdale, I wanted to park in the long-term parking, but it was full. So don't think for a minute airline traffic is down. It may be down on an international basis with people not necessarily crossing borders as before, but air travel is busy. And by the way, I was on this flight. It was a direct flight from Fort Lauderdale to Charlotte, and obviously the return flight as well. There was not one single seat on the plane. The plane was absolutely chock-a-block full. And of course, when I got back into Fort Lauderdale, I had to pay exorbitant rates for parking because the long-term parking was full. Anyway, here's another little report. It's kind of interesting here. I just highlighted a section. Can Occidental run higher on rising interest estimates? Down here at the bottom, current quarter estimate revisions, right? It's coming up November 8th. For the current quarter, the company is expected to earn 62 cents per share. Well, that's kind of shifted quite a bit. Just a couple of weeks ago, the analyst was saying 54 cents. Mr. Oxy stuck his neck out and said it's going to be 60 cents or greater. We chatted a little bit about this. I know Dr. Yidi Zhang and I were kind of exchanging notes on this. I said in the 60s for sure, maybe even as high as 64 cents. Anyway, the estimate revisions are now 62 cents per share, which is a change of 173%. Well, yeah, a year ago, the reported number doesn't really matter because it was heavily impacted by a whole lot of extraneous macro factors. The Zacks consensus estimate for Occidental has increased 165% over the last 30 days, as 4 estimates have gone higher, while only 1 has gone lower. Are you crazy? Who's going lower? I don't know. I don't even need to look. It doesn't matter. For the full year, Occidental is reported to or expected to earn $1.50 per share, representing once again a change year over year of almost 40%. There has been an encouraging trend in estimate revisions for the current year as well. Over the past month, 4 estimates have moved up for Occidental. This has pushed the consensus estimate 53% higher. Enough of that one. Let's get into this one. This was actually the reason why I thought I'd make this video. So let's quickly take a look at this one. Oilprice.com reports, this was yesterday, Svetlana Paraskova, reported, forget $100. Options traders are now betting on oil prices hitting $200. And of course, when I see a headline like this, I have to look. So one of the things that I sort of prevent doing on this channel is talking too much about options trading. I don't want to confuse people. You can make good money being long and strong if you just find yourself an undervalued stock like Occidental Petroleum and just holding it. So I appreciate the fact that many of the people who watch this channel are more sophisticated and far smarter than what I am, especially when it comes to doing a whole variety of fancy trades, including trading options and swings and things like that. My methodology is simple and has worked for me. And if you've been following my channel and doing some of the things along with me, it's probably worked for you too. So it's not too bad. What does Svetlana say? As oil prices hit multi-year highs, some speculative traders are betting on the options market that oil could exceed $100 a barrel by the end of this year and even reach a record $200 per barrel by the end of 2022. Man, would that be inflationary, eh? The best hedge that you have against this type of thing is to actually own oil. You just go long energy and you're probably going to be okay. I said this before, and this is not like a recommendation. It's just a sort of a basic factoid. You can literally print yourself a list of energy stocks and throw darts at them. It's not that difficult to pick an energy stock that is going to give you a good return. It's very difficult to pick one that's really undervalued, that's going to be good long term, but it's not tough to get an energy stock that is going to give you good performance. Call options give traders the right, but not the obligation to buy assets at a certain price, the so-called strike price, by a certain date. Now, we've talked about this before in a variety of different ways, including Occidental warrants, right? They give you the right to buy at a certain price, which is called the strike price, by a certain date. It's not an obligation. You just have the right to buy. Now, if you have warrants and you let them expire, nothing will happen. If you have warrants and you exercise your right to buy Oxy, at whatever point in the future, you can buy those Occidental shares for $22 because that's the strike price. This is the most basic definition of a derivative because the value of the financial instrument that you hold, in this particular instance, an option, a call option, or otherwise a warrant, is a derivative because the value is derived at a future date at a certain strike price. Now, the amount of call options at triple-digit strikes have soared in recent weeks, suggesting that more speculative traders are attracted by potential quick profits from options trades, which are relatively low-cost ways to speculate on the direction of an asset. I don't speculate at all, guys. I don't speculate. You could say some of my nuclear and uranium assets are speculation, and I say it's kind of a speculative trade, but even there, I carefully look for the ones that are grossly undervalued, where I think there's significant upside. And for those of you who've been listening to my vlog over the past few weeks or so, you'll know that I have a basket of about 5, right? So I have Paladin and GoVX and Energy Fuels and Denison Mines, and I have Cameco, and you can look them up if you want. They've all performed really well since I went long. So I didn't speculate. There's no options trades on it. I just bought them long and strong. I just hold them. For example, at the end of September, call options at Brent at $200 a barrel for December 2022 traded 1,300 times in one day amid a worsening energy crunch in Europe and Asia. These guys are burning coal as if it's going off the charts. Europe and Asia, especially Europe, the green group, they are burning coal because they need the energy ahead of the winter heating season in the Northern Hemisphere. In WTI, the number of outstanding call options with $100 per barrel strike prices with different expiration dates has surged 5 times since early 2021 to more than 141,000 contracts as of the middle of October, according to data from the CME quoted by the journal. Other popular call options for WTI include strikes at 95 or $180. Quick strike data reported by the journal shows. I have not seen crazy strikes like this in a long time, says Mark Beningo, the co-director of the energy trading at StoneX Group. That's what he said to the Wall Street Journal. So guys, $200 per barrel oil, you think it's possible? What are your predictions? I say we are going to cross over $100 a barrel within the next few months. But then I'm not too sure what happens after that. We're many years past the date when oil, WTI specifically, was trading at around $130 a barrel before it came tumbling down. So I don't know. Let me know in the comments what you think. In the meantime, as usual, thanks for watching. Talk to you guys soon. Bye.